to the ETF Inspector. It's Sunday, June 22nd, and this will be the video for our week look ahead as well as guesstimate on the distribution declaration for the two weekly paying YieldMax funds we cover, which are ULTY, the Ultra Option Income Strategy, and LFGY, the Crypto Industry and Tech Portfolio Option Income ETF. All right, we don't need to talk about trades today because we already did that on the Friday recap. So today we will talk about, we updated the 30-day IVs for all the underlyings within the fund. We'll kind of glance over the weightings to see what we're heavy in, what we're light in. And then we'll just take a look at our options that are already sold for this week and the price ranges basically that we need these stocks to trade within for us to make the maximum profit. Okay, so off the bat, let's just get started. We went through and updated the 38-day IVs with some increases, some decreases, so it's better than just dropping like the weeks past. Applied digital, 96.1%. I think I'm just going to kind of hit the highlight reel. I'm not going to sit and read every single one of them. Or maybe I'll just kind of get through it faster. AppLovin in the 60s, AST Space Mobile at 89, Coinbase at 62, Circle Internet Group. This helped us a lot, right? This is one of the heavier weightings that we have, nearly 5%. And obviously they went through the roof. So we've got a nearly 180% 30-day IV. They haven't even been around for 30 days, but weighing in on our average. Let's go ahead and talk at the same time about the weighting so we don't have to back up again. So we range anywhere from like 2.2% to somewhere in the 5.5% range. So they're fairly close, but there's a decent difference there. AST Space Mobile has grown to be one of the bigger ones. We've got almost $30 million in them. Circle Internet Group, we already sold some of them the other day and still have 26 million. First Solar's getting small, 2.5%, 60s for the IV. Hims and Hers is over 5% with an 85. Robinhood another over 5% with a 60% IV. IonQ about 4.5 in the 80s. LabVIEW is one of our smaller ones, about 2.5%, 75% IV. Mara, another low one, 2.8, 66%. And if you're just wondering how I got this, right, I take for each one, it's the value of the position in that stock divided by the sum of all the positions of stocks. That's how we get our weightings. And then I use Market Chameleon to look up the 30-day IV. MicroStrategy, 3.5%, 49%. So I know all the Misty people are not liking that. Dropping below 50% doesn't help with your distributions. NVIDIA, another one dropping low, 34% on the IV, 4.6% of the weight of the fund. Oklo, 4.3% and nearly 100% IV. Palantir, 4.5%, 51%. So again, Pallady, I think that dropped. You guys want higher IVs to get higher distributions. Reddit about 5.5%, 68% IV. Rigetti 3.4 with an 86%. RH, this is our smallest holding, I believe, about 2.25% with a 60% IV. SMCI a little over 3% in the 60s. Tempest a little over 3% in the 70s. TNA, it's a triple leveraged fund. So that's crazy. A triple leveraged fund only having 68% IV. What was LabVIEW? 75. They're 3.75% of what we have in the fund. TQQQ even lower with a 57% IV. Tesla, almost 5% of the fund, 61% IV. Upstart, 4.7 with a 67. Vertiv, another real low one, 2.27% of the fund, 49% IV. Investor Corp, 3.27 with 53% IV. So if we take I do a weighted average, not just the average. So you multiply the weight by the IV and then add all of them together. That'll give you your overall weighted average IV of the fund, and it went up to 73.88, so that will help with our distribution. Let's go ahead and go to that, and then we'll backtrack to how our options look for the week. All right, so if we look through our trades, the week went 6/16 through 6/20 with no trading on the holiday of June 19th. So we start on 1562. And we go to 1836, so considerably less than last week, about 270, say, trades. So a lot easier to process than 400. We go through the trading week. Trading wise, lost 4.7 million on Monday, made 1.8 million on Tuesday, lost 4.9 million on Wednesday, no trades on Thursday, lost 5.4 million on Friday, for a total loss trading wise, options income or loss at this point of 13.3 million. So if we made our estimate based on the income, well, we lost money, so that doesn't really work. It'd be a negative 16-cent distribution. We'll take a look at the fund did well, right? The only way you have these huge losses on trading your options is because you had huge gains in the underlying stocks themselves. So we made 18 million on Monday, which was our single day best for the fund. We then lost a good portion of that, 12 million on Tuesday. Then we beat our Monday record on Wednesday with a $19.6 million increase in value. Now, don't get these mixed up. These trading losses are realized losses. These share value increases and decreases are just the value went up and down as the stock prices went up and down. So these are not realized. But set a new record, 19.6 million on Wednesday, no trades on Thursday, made or improved by 3.6 million on Friday. Overall, improving the value of the fund by almost 30 million. So that would be the reason the ULTY went up even with paying a distribution, even with losing money in our realized gains and losses. So they're gonna be able to pay us out and not have NAV erosion because the value went up so much. So the estimate, if we take the closing share price on Friday of 620, we multiply it by the weighted 30-day IV of everything combined, and that gives us the 8.81 cents. So I said I made my guesstimate 875, which was exactly what they paid last week, and my reason being was because as the fund is growing, right, that's more to pay out, more outstanding shares. We lost money last week, and this is what they paid out with a estimate very close to this, and we lost money again this week. So I mean, I wouldn't be surprised if they go like 9 cents, just because we did so well value wise that we can afford to take a little bit more out of the price of ULTY. But I'm gonna give them 8.75, and maybe we'll get a little surprise to the upside. I probably should go a little higher since the IV is 8.8, but I don't know. I'm gonna give them 8.9, 9 cents. So that's my guess. We'll see how it does. All right, now let's backtrack a little, and we will just look at how our options they rolled on Friday if they hadn't already rolled. So now we're looking at this coming week, trading week ending June 27th, and we've got highlighted here the sold portions of the options because that's where we're making money or trying to. So if they end up in the money, that's bad because we sold them. We want them to expire worthless so we get to keep everything that we collected selling them. So if they go in the money, we got to pay. We got a handful that are starting the week in the money. We usually don't start in the money. We usually start with all yellows and greens. Yellow being in our favor, out of the money, but less than 5%, and green being greater than 5%. All right, Applied Digital, $12 is our sold strike price on the calls. Those are 16% out of the money. So there's plenty of room for Applied Digital to improve on that 1033 without hurting us on these. So we would like it to trade up this week. Obviously, that would help the NAV without going over 12, so we get to keep the majority of what we collected, the premium collected on the sale of that. Now they do a collar strategy if you haven't watched this before. So they own the shares, they sell calls, and then they also buy puts. Buying those puts is what's been protecting the NAV from NAV erosion, because if the value of our stocks drop and you didn't have those puts, then your NAV is dropping. The overall value is dropping. So if the stock drops, then the value of these puts increases to offset it, and that's how you that's why we've been hanging at $6 ish for such a long time here. Okay, AppLovin, they've got 345 as their price chosen. Those are 6.25% out of the money. So again, we can afford an almost $20 increase in AppLovin. AST Space Mobile, 8.84% out of the money with these 50s. They're at roughly 46, so we can afford almost $4 of increase in value there. Coinbase, this is a rough one. We need Coinbase to drop this week. 295s are already 4.34% in the money. And then we've got 315s that are 2% out of the money. So to keep the most amount, we actually need to drop from 308 down to 295. Don't be surprised if there's an early up day and they just close these out, take the loss, and roll them. Circle Internet Group, good luck guessing this one. If you didn't watch my my trades video, you can go check that one out next and see how this one kicked my butt, but kicked their butt too. So they already had to close out for losses and roll, and even their rolls are sitting at a loss. So 210 is the strike price they have selected. Those are already 12% in the money because the stock's at 240. They've also got more at 260 that are 8% out of the money, but you would need, you can see, right, that's currently going to cost $2.5 million to close out those 210s. So we would need Circle Internet Group to drop by $30 a share just to not lose this $2.5 million. First Solar, they have 150 and 152.50. The majority at the 152.50, but if we want to make the maximum profit, we can afford this to go up a few bucks, but not to break over 150. They're about 3.5% and 5% out of the money. Hims and Hers, they've got about 3 times as many at 68, as many calls, I'm saying, than 66. So the 66s are 2.7% out of the money, and the 68s are 5.8. We're already at 64.22, so we can't afford much of an increase, especially not early in the week, to be able to close these out and keep that premium. Robinhood, we're close on these too, right? We're only 1.9 and 3.1% out of the money. There's about twice as many at the 81 strike than the 80, but it's currently at 78.50, so we can't afford more than $1.50 on the entire week. IonQ, here's another one. We're going into the week already in the money. There's $40 calls, 1,190 contracts there that are 0.89% in the money, so we'll need this to drop some. They've also got 42.50s and a large chunk at 43.50s. You see over 3,700 contracts that are 5 and 7% out of the money. So it would be possible to land between 40 and 42 and still make a profit, since there's basically 4 times as many contracts above at 42.50 and 43.50 than there is at 43. But to keep the maximum, and especially it's not that big of a drop. If this drops down below 40, we get to keep the maximum amount of profit. LabVIEW, the triple leveraged S&P Biotech Bull Fund, $60.50 is the strike price on the calls. They're roughly 7% out of the money. We can afford a few dollars of increase there to make the biggest value increase as well as keep the most premium. Mara Holdings, they've got 1550 selected for Friday's strike price. They're 8.24% out of the money. You can't afford much more than $1 increase there. MicroStrategy, they're playing these pretty tight, especially since they had a bad week dropping into the 360s. So now we can only afford a 1.43% increase to 375. Don't have a great feeling about that. One good day at MicroStrategy and they're back over 400. We've seen that happen a lot of times. So not feeling warm and fuzzy about our position for MicroStrategy. NVIDIA, 148's the strike price. They're 2.8% out of the money. We can afford, call it $4. We'll say $4 of increase throughout the week. Oklo, 67's the call strike price with they're 15+% out of the money. So this stock can increase a good amount. We can get some good value increase while still getting to keep this premium. We're about $9 under that strike. Palantir's got 142 and 148 evenly split, 890 contracts each. They're 3.4 and 7.7% out of the money, with the stock at 137.30. So nearly nearly $5 of room to run there. Reddit is at 139.15 with 155 as the strike price. They're 11% out of the money. We can afford to have a pretty nice week on them. Rigetti, they're at 11.06. We've got a large portion, 12,000 contracts at 12, and 1250's got 3,800 contracts. So they're 8.5 and 13% out of the money. But yeah, we'll see. Rigetti keeps bouncing back and forth, kind of in that 10 to 12 range. RH, 188.85 is the price with 190 as the strike price on the calls. They are 0.6% out of the money. We need RH to basically sit still all week. And then unfortunately with that, a sit still week would equal a decreasing IV. But SMCI, they've got 47.50 selected. They're 4.8% out of the money. There's roughly $2 of room that can increase. Tempest AI, 74 and 75 are their strike prices. The vast majority, 2,000 contracts, are at the 74. They're 8.3% out of the money, and the others are almost 8% out of the money. So we can afford roughly $5. We wouldn't want to go $6. That would put us over. TNA, 32.50 is the single strike price selected. 6,600 contracts. They're about 5.5% out of the money. They're at 30.82, so about $1.70 there, a little less. TQQQ, so these last two were triple leveraged. 76 as their strike price for their calls. 3,300 contracts. They're almost 5% out of the money, so we can afford a few bucks of increase. Tesla, 322.16 is where it closed. We have 330s and 337.50s with about twice as many at 330. They're 2.4 and 4.7% out of the money. So, Tesla could easily go over 330 for sure, and we're in trouble. But we've got safely about between $7 and $8 of room to grow. Upstart, here's another one. We're starting in the red right off the bat. 56 is the strike price. 58.01 is where it ended, so we need them to drop by $2 and then not increase. The others, 62, are 6.8% out of the money. Vertiv Holdings, 2.92% out of the money with their 122s, currently at 118.54. And Vistra Corp, 190 is the call strike price. 185.10 is where it ended. Those are 2.65% out of the money. So now we can finally say our net assets are current because we are not on a trading day, so we're able to just see everything as the dust has settled. There are 90,100,000 outstanding shares. that creates a NAV, a net asset value of $6.25. So actually, if you were buying on Friday, which is a little weird because Friday was the X day, the day that it dropped the 8.75 cents, where normally Friday is the payday. But so if you bought on Friday, you got a 5-cent discount. You were getting to buy it for less than what it was worth. All right, so that's everything for ULTY. Now let's go ahead and do the same thing for LFGY. Slightly smaller, not slightly, there's probably half as many stocks within this fund, so we can get through it a little quicker. The weightings are definitely not as evenly allocated as they are over in ULTY. We sway from in the ones to, as you can see here, Coinbase is worth almost 15% of the total. So we've got BitDeer, 3% of the weight, 96% IV. CleanSparks, 4% with a 72% IV. Coinbase, I'm pretty sure they're going to be the highest, almost 15% of the fund. It's 62% IV, so they're going to have a pretty heavy weight on our average. Core Scientific, 5.4% with a 64% IV. Galaxy, only 1.5% of the fund with a 94% IV. GameStop, 3.32%, 60% IV. Robinhood, 6% of the money, 60% IV. Hut 8 Corp, getting close to 5% with an 83% IV. IBIT, about 9.5% of our money's there. Right, so they're heavy in the crypto. This is a crypto and tech, but this is heavily crypto. But IBIT's only got a 40% IV. Mara, 7.23% with a 66% IV. Mercado Libre, 4%, 4.3 with a 32. So we've got much lower IVs over here in LFGY. MicroStrategy, which is basically a holdings of Bitcoin. So 10.62%, 49.5% IV. NU Holdings, 3.8% with a 37% IV. NVIDIA, 2.7% with a 34% IV. Opera, 4% with 39% IV. PayPal, 2.7% with a 31% IV. Riot Platforms, 4.5% with a 69% IV. Tesla, 4.5% with 61% IV. And Block, 2.43% with a 40% IV. So where ULTY is basically trying to find, I wouldn't say the highest, but the ones they like to trade with the highest IVs possible to get the most income, collecting that premium. With LFGY being specifically a crypto and tech, then they're not going to be able to pick some of the other real high IV ones, and they're kind of going to be stuck with the main crypto and tech ones, which is why you're going to end up with a lot of lower IV because you were just forced to pick based on the stocks and funds, not based on the IVs. All right, so we'll do like we did on the last one. So that averages out to a 57%. That's only I want to say it's a slight decrease from last week. I think last week we were at 57.15. But there was a slight increase to LFGY from where we made our estimates last week. 38.75 is where it ended. So if we come over and look at our trades for the week, we only ended up doing trades on 3 days last week because they didn't trade on Monday anything in the fund, and then Thursday was a holiday. So our trades start at line 854 and go to 1024, so 170 trades throughout the week. Not bad for me work-wise. If we take a look at how we performed, again, no trades Monday, made $233,000 on Tuesday, lost $579,000 on Wednesday, no trades on Thursday, lost $24,000 on Friday. So we lost $371,000 trading this past week. And then the value increases and decreases Basically went up 4.5 million on Monday, pretty much lost it on Tuesday, went up 2.8 million on Wednesday, and then lost 133,000 on Friday, for an overall increase in value of 2.8, almost 2.9 million dollars. So when we do our estimates based on income, so that would just be dividing what they made, in this case lost, by the amount of shares. To split it up, they would have lost 10 cents a share. So we're not getting a bill in the mail. So next, what they try to go for is paying out based on the IV. So if we take the IV, which was the 38 or the 57%, we multiply it by the closing price on Friday, 38.75, and then we divide that out by 52 since this is a weekly payer. That comes out to 42.5 cents. Now, last week was a loss as well, and they paid, I want to say, 46.84 cents. We lost less than last week, and our value increased. So with that estimate, I think they're showing us they want to pay around 46 cents. So that's going to be my guess again. So it is what it is, right? You don't watch for the guess. You watch for all the information. The guess is just a little extra fun. Doesn't really matter what I say. They'll pay what they pay. So 46 is my guess, 46 cents. All right, so now let's take a look at where we sit for the week. A quick scroll. Yeah, we only have one in the red, so it's a little bit better than ULTY. So BitDeer has 1250 selected for their call strikes. They're 10.82% out of the money. They can afford we'll say $1.25 will put them over. Increase throughout the week to keep the majority of the premium collected and also increase in value. Quick note, LFGY does not do a collar strategy the way ULTY does. They own the shares and then they sell calls. Sometimes they will protect those calls with a purchased call further out. So that limits them, right? The difference between these two strikes would limit them to a loss of $1.50 per share. There's 100 shares in a contract. There's 3,500 contracts. But so they are limited in what they can lose. But if they just sell a call, they're not limited in what they lose. So if you were trading this yourself, then if it goes up beyond your sold strike price, you just let the shares get called away, so you don't really lose anything. These guys don't let the shares, they don't go to assignment or exercising, so they always close out. So if this stock runs up to $20, they're gonna pay the difference to close them out. Which I don't know. Maybe if one exploded on them, maybe that would just be their exit strategy. Just let them get called away. But even then, it doesn't. I haven't seen them let a single thing go to assignment. All right, Clean Spark's got 950 chosen. Stock at $9. They're 5.5% out of the money, but there's only 50 cents of room to run there, so pretty much need them to sit flat. Coinbase, they're sitting better over here in LFGY than they were in ULTY, because ULTY was starting red in the money. These guys have 325 chosen. That feels pretty safe, 5.3% out of the money, with the stock sitting at 308, so it can actually go up. Core Scientific, 1250 as the price chosen, so we got less than 70 cents to go. They're 5.5% out of the money. Galaxy Digital has two prices selected. Not sure why they have a 47 contracts at 1950, but they've got 1,000 contracts at 2050. So really, we can afford to lose these 1950s without even noticing. They're 3% out of the money. The $20.50 are 8.7. So we definitely need it to stay under 2050 to make an overall profit for the week. Obviously, for the maximum profit, we'd want it to stay under 1950, but losing this would not make us an overall loss for the week. GameStop, 24.50 is the chosen price, with it roughly at 24.50, so there's about $1 of room to run. 4.4% out of the money. Robinhood, These are tight, right? 78.50 is where it closed. 79's the strike price. So throughout the entire week, it can't go up 50 cents. They're 0.6% out of the money. Hut 8 Corp, 18 is the strike price on the calls. 3,700 contracts. It's at 16.70, so we've got $1.30 worth of room to go. That's 7.7% out of the money. We don't do options on IBIT, so IBIT can go through the roof. It's at 58. It could go to 5,000. We don't care. That would just make us money without any options to worry about. Mara Holdings, they have $15 chosen with 6,600 contracts there. 14.32. So there's less than 70 cents that can go up. 4.7%. MBTX, this is the one odd one within the fund. So we don't own any shares. They've got a call spread sold till July 18th here. 260 is what it needs to stay under to win that trade. It's at 244.39. That's 6% out of the money. But then they also did a debit put spread. So they paid for this combination, not sold it. And so the way that it makes more money is for between now and December 31st, the stock to drop below 230. So they're basically between now and July 18th betting that it won't go over 260, and between now and the end of the year, they are betting that it will drop well below 230. So if you're an MBTX person, it looks like you should be bearish, or at least it means they're bearish. So these are 5.89% out of the money. So this is the one where they're making money. That's why I colored it, even though it's not the sold position. It's a little goofy. But this number goes to zero if the stock's at or above 230 by the end of the year. So right now it's 6 million. So this needs to drop below 230 for them to make money. Mercado Libre, MELI, MELI is the ticker. They've sold 2450s. That's 2,450 as the strike price. It's at a little over 2,400. That's 1.92%. So less than $50 room to run. $50 sounds like a lot, but not when we're talking about $2,400 stock. MicroStrategy, they chose 385 as the strike price with 369 as the current. So we've got a decent, call it $15. We could safely go up 4.14% out of the money. So we could make some increase in value there without losing that trade. NU Holdings, we're starting in the red. 12.14 is where it closed, and 12 is the call strike price. So we need them to drop 14 cents throughout the week. Nvidia, they chose 146 with the stock at 143.85. That's about 1.5% out of the money. Opera, they're sitting at 18 with a $20 strike price. That's almost 11%. It can increase because that's how far it is out of the money. So we could win this trade and have a decent increase here. So we haven't done it every time, but let's see. So it could go up 10%. We could still win, keep the premium, and win the trade. So 10% of 5 million. So we could make a $500,000 increase in value while keeping the premium throughout the week. That's how that goes. You could go back and apply that to every one. I don't want the video to take an hour. PayPal Holdings, sitting at 70, strike at 73. They're 4.2% out of the money. Riot Platforms, they chose 10 and 1050, but as you can see, there's only 181 contracts at 10, and there's 6,000 at 1050. So again, this is one for the maximum. We'd like it to stay under 10, but we can lose this trade, the $10 strike, and still overall win if we stay under the 1050. Especially so 181 contracts at less than $1 difference, 50-cent difference. Like it wouldn't cost nearly anything to close them out, even if we lost them, as long as we still won the 1050s. They're 4.6 and 9.8% out of the money. Tesla, they're 3.99%. Call it 4% out of the money with these 335s. It's sitting at 322.16. So there's a little under $13 worth of room to increase. And finally, Block, 3.79% out of the money with these 66s, stock at $63.59. Our overall value, the net assets under management, is $135 million. There's 3.5 million outstanding shares. So the NAV is actually $38.59. So if you were buying at the end of the day on Friday, you were paying a premium for it. These usually stick within a couple cents of each other, both LFGY and ULTY. So, all right, so that's everything. We know how we want these stocks to trade within the week, whether you have ULTY, LFGY, or both. These are interesting too. Like if you're looking to trade options on any of these stocks, you can see where the pros are trading, what strike prices they're trading, and maybe if you want to follow along, that's not my financial advice. I'm just saying it's more information is always better than less. So I got a dad joke of the day for you so we can close this out. So quick recap, we said 8.75 cents again for ULTY and 46 cents for LFGY. We know where we're trading. So now we just sit back and watch. So thanks for watching. If you made it this far, I appreciate it. Please hit the like if you liked it. That doesn't do anything. Like you don't get money from likes or anything. It just helps tell YouTube that people like the video, and then it will basically suggest it for more people. And then as more people come to watch the videos, you get more views, more watch time. You get the ability to make more money. I currently don't make any money. I haven't hit the requirements yet. The requirements for that are 1,000 subscribers or more and 4,000 watch hours. So I'm sitting at 886 subscribers and 2,000 watch hours. So I'm at the halfway point, 70 videos in before there's any ability to make any money. So don't think that I'm making a killing here. But anyway, subscribe if you haven't already. Please share the videos with anybody you know in ULTY or LFGY. Dad joke of the day. For some people, you might have to sit and think about this for a minute to get it. But anyway, what do you call a fat psychic? A fortune teller. It'll hit you. Just wait for it. Fortune. All right. I hope you guys have a great weekend and good luck trading tomorrow.